Big risk off this week, Steve. We're moving into election time, and it certainly seems as though markets are very much negative. Hello, everyone, and welcome to another of our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. Now, as ever, we're going to be pointing you towards our website, hmarkets.com, for you to sign up to a demo account very quickly, or even sign up for a live trading account in 4 easy steps. Now, this week, we've got decidedly risk off in front of a lot of major risk factors in the next week, with the culmination of the presidential election. And we're looking at that impacting markets next week, I think, Steve.
Yeah, certainly. We've got that big event on the horizon. Yeah, clearly the US presidential election, Senate and House of Representatives too. So we've got this huge potential for markets to swing in either direction, but they're making their feelings felt right now with this significant sell-off in riskier assets, as you said.
Predominantly through equities, though, right?
Yeah, and that's why you're starting off looking at DAX, right?
Yeah, DAX is, I think, the key trade that we're looking at, and you've seen that Wall Street have been selling off in the last few days, but the DAX has really been hit, and that's coming as you've got the sort of culmination of this, obviously the election risk, but also you've got COVID rates in Europe rising hard, and that's affecting their outlook on how the economic recovery in Europe is going to be treated.
Sure.
And I think that is really hitting hard through the DAX, and we've seen a big breakdown below 12,254, and that completed a big head and shoulders top pattern, and that one I think is the key move that implies maybe even 1,200 ticks of downside move. Now, Steve, we were talking off camera and you were saying maybe this is not. Wow, it's happening really quickly, isn't it?
Yeah, it is. Yeah, exactly. I mean, that, we're technical analysts, right? And we've got that huge head and shoulders topping pattern that's built over a number of months. The longer is, the more significant the break of the pattern is. And you know what, it has taken me a little bit by surprise. I thought, in normal circumstances we would hit the pattern target, which you've got down at is 11,000, right? But we're already down close to that important support from June at 11,600, and we're getting there quick, and there's plenty of scope for us to get there before next week's US presidential election. And as you said there, all of the COVID is just not helping at all, is it?
Yeah, target of 1,200 ticks, sort of you sort of take the length of time that the top gets built, and then you project that down, and you say that, well, the target's going to be hit in that projection of the time frame. So I think that could be maybe 3 or 4 months of downside projection target, but as you said, that the selling pressure is so significant. And it's interesting that the 11,600 basis of support from the June low has all but been tested and rebounded from that. And you've got the RSI, which is already now down at 25, but this is a really significant selling momentum phase that you've got in the DAX. And whether that June low holds or not, that will be key, I think, near term. But you've got the resistance of the neckline now at 12,250. Basis of resistance is key around there for a rebound.
Yeah. And also the other thing is to know, as mentioning COVID there, Germany at the moment debating about whether to go into a more significant lockdown. They're talking about closing schools again in Germany. So obviously that's having a potential negative impact as well if we have a more comprehensive lockdown from Germany. And obviously we're seeing similar throughout Europe and the UK.
And obviously on the very near-term event risk, you've got the ECB this Thursday as well. So it'll be a very interesting week ahead.
Yeah, indeed. So I'm going to take a look at dollar yen, which kind of sits in, that same kind of risk-off scenario that we've been talking about. FX is a little confused at the moment. So the dollar not really knowing what it wants to do, whether it's got the correlation with the equity markets, which has been that inverse correlation we've seen really throughout in the post-pandemic world that we've been in. We've seen the inverse correlation between stocks and the dollar. However, kind of a little confused broadly, but what we are seeing certainly is dollar yen doing its traditional thing of risk off, accelerating lower over the past couple of days in here, as those stock indices have gone lower in Europe and in the US. And we're breaking down close to that kind of key support low from September at 104.00. You've got kind of a falling wedge pattern, which is traditionally potentially bullish. However, the market is getting close to that 104.00 low. And if we break that and break the bottom of that kind of that wedge low in here, I can easily see this accelerating lower into the US election in here, with the yen effectively rallying in that kind of risk off scenario.
Yeah, I think the way that I look at wedges is that if you break the downside support line of that wedge, that makes the projection to the downside. I don't, you'd need to hit that support line and then rebound and go instantly through the other downtrend of that wedge to really break out for the upside. So I'm taking this as negative. Certainly, I think. I mean, I talk about this quite a lot, in the fact that you tend to see about 50 pips of downside move every month or so. I think on dollar yen seems to be tracking that way lower, and again hit the resistance at 106 figure last month. Just recently hit 105.50 and come off. Now eyeing 104 figure. I think a downside break of 104 figure really does open the way lower again. Those March lows around 101 area. There's a massive long-term support, 100 to 101. I think we're seeing that, I think, in the coming weeks.
So and again, outside of the election, I'll be certainly looking for that 101 100 area and down. You say we're getting, we're not that far away from the March lows. Those are the pandemic lows when it was at its worst, right? So it shows you the risk off sentiment that is coming through. And as you say, 104 is going to be critical. We take that out and it all looks very vulnerable again. Whether, again, we have a huge unknown out there next Tuesday, Wednesday, whether that gives us a risk on or risk off shift through the US presidential election. But at the moment, just going with the charts, it's got to be dollar yen bearish.
I think so. Yeah, I think so.
Cool.
Excellent. Well, good to speak to you again, Steve. Thank you very much. And we'll speak to you all next time for some more Trader Talks.